This is Short Hammer. It is the 31st of May, 2021, and this is Trading Zones. I believe I missed last week's video. It's just a lot. So busy. And I don't believe I was able to really just set aside not even 30 minutes to do the video. There was so busy and good busy, right? Just a lot of great things happening. So my apologies. So for this week's video, let's talk about last week. It was very choppy. You had to be really patient with your entries and only enter at key levels. And I must admit, I got trampled a few times just being impatient and also being too greedy. And I definitely like to set and trail and leave and walk away, then come back to the screen sometimes, just because I have other things going on that I'm trying to handle. And so I did. You get stopped out more than I like, but it was still an okay week. Not as great as I would like, but it was okay. So if we're looking at the market, you see these shaded areas. I used to do zones a lot on TOS, but the reason for a zone is what a zone tells you is that in the market, usually there's an area of entry that you look for a reaction or reversal based on candle structure to get into an opposing play, right? Or to get into a continuation play. And when you have lines, sometimes it may not be as clear. And so I'm going to really start zoning out my charts here. I have so many of them that are zoned in TOS and other places that I am going to do it here also to make sure that it's clear. Um, but looking at the MNQ, what we're watching is right here around this 13,663 area, and the upper part of the zone is 13,688. So we pushed near the bottom of the zone. Buyers are pushing us up a little bit. So what we're going to watch for next week is, do we buy up above this area? Can we find bullish continuation and bullish candles above the 88? And can that push us towards the 13,726 by 13,757 zone? Now, the way that we would play that is, once we enter the bottom portion of the zone, what you're looking for is reversal candles of some sort, telling you that the sellers are saying, "Hey, that's the end of the road, bud," and the buyers are saying, "Yeah, I've had enough of this. Let me get out here, because I think the buying may not continue. People may not see more value higher," and so that's what you look for. So let's watch our levels here. So it's going to be this 13,726 by 13,757. And so above this area, we're still bullish into the next zone. Below this area, we're bearish into the next zone. And so we'll see how that plays out this upcoming week. So this zone down here is 13,563 by 13,583, 13,425 by 13,388, 13,266 by 13,243, 13,118, 50 by 13,089.50, and 13,873 by 13,901. And if you're wondering, like, well, how the heck do you use these zones? Like, what the heck are you doing? Well, if I get in at one point in the zone, then I have a clear stop, right? And sometimes I'll alter my stop based on candle structure, because the for example, let's say you have a 10-point stop, right? Or a 15-point stop, but the candle structure, or the market where the buyers and sellers are, and sort of where that interaction is going to happen, is at 20 points or 25 points. So based on your entry, if I know that roughly up here is where that area is, and I only have a 10-point stop, then I have to enter around 47, right? And if I get stopped out and it pushes a little further, and it begins to, I see sort of a topping and a reversal, and the volume is going down, and it appears as if we're about to go back down, I could re-enter again, and put a stop over the high of the previous candle, right? At the area where I feel the reversal is going to happen, if I happen to be stopped out, I could re-enter there and keep my stop even tighter. So whatever you're using, it's usually best to use candle structure and just basically an area where there was previous buying and selling as the area where you would look to enter to get a higher probability trade. And the market sort of oscillates between sort of range where it's stuck between a specific area like it was this week and extension. And so the market is always consolidation to extension, consolidation to extension. Some stocks do that more than others, but that's the entire market. And being able to judge the times of consolidation and trade, use specific strategies for consolidating or consolidated trading. So when it's going between this area back and forth, what types of tools do you use to attack that? And when the market is just extending or expanding, what tools do you use to execute on that? It's very important in this market to not misread um, the current temperament of the market. So watch these zones. Um, Prayerfully, you've had a chance to either screenshot this or take these down. I'll be adding more when I get an opportunity to add those in. But definitely watch these zones because what I'm going to be watching personally is, do these areas hold up, right? So do these areas hold up? And we're seeing this dip here as I'm talking. We're seeing this dip into the 13663 area. So we'll see, do these areas hold up or do we dip below and fade down here near the 13580s? We'll see how that plays out. Headed over to the MES. So haven't had a chance to do the zones over here, but looking at the MES, we're below the 4203. Want to get back above that. And if you're looking at just the waves, right? This is the high wave. This is the lower wave. We went up, didn't make quite a higher high, but made a higher low here and made a higher high wave here, higher high wave here, higher high wave here. So on this pullback, you would like us to stay above this 41, what's this 4180 um, lower wave, right? That's what you'd want to see. And for us to get another higher high and break this top. So this pattern is from this point is higher highs and higher lows. Just looking at this wave forward, right? That's what we're seeing here. So the question is, will that continue? And this higher high isn't much higher, but if it stays above this low, we could still get another ricochet back up. So we'll see how that works out. This line right here is, I think it's right around 4232, but 4230s. That's the top of that line. So we'll see if we're able to stay above the 40, get back above the 4203 and go, or if we sort of drift back down here near the 4180s. And if we don't hold that and we drop to the 4168s, we'll know that this little higher low, higher high pattern is is out the window, right? So we'll see if that breaks or that changes. Um, because from roughly you could almost say the 19th of May, you could almost say that, right? We've been getting lower, higher lows. And so we'll see if this pulls back down. So that's what I'll be watching on the MES. And so the lines 4168, 4142, 4110, 4074, and I'll zone these all out. It just takes time to do it, which I just have not had a lot of, just so much And what's funny is a lot of it's just so much stuff in the house and online, just so many different things to do. We just have so much happening right now. Um, I'm not going to get into it, but there are a lot of great things happening for us right now. And but I still want to make sure I do these videos because if it's helpful to at least one or two people, it's worth the time to do the videos. It's definitely worth it. So RTY. So we have this little line here. We'll see if how this holds up. It's just a small little trend line here in the middle. We'll see. What we want to see is that we hold this and we sort of head back up. But it's also been a similar type of pattern, right? Where we're trying to make higher highs and higher lows. So we'll see if this continues. The lower low will be way back down here around 2239 ish. So not sure if that's going to happen, but we have to see. Um, Being this is going to be a shortened week because of Memorial Day, you want to see how the market, how people come back in, and also what we have to remember is that um, it's the summer months basically, right? It's summertime, and things tend to slow down until school opens back up in September. So a lot of people are expecting things to be a little bit slow. That doesn't mean it may not be volatile because these are strange times that we are in. But I think what people are saying is a lot of the bigger money that's usually pushing the market to and fro may not be as heavy in the summer, and that may be what they're saying. Like as far as the heavy activity of positioning and hedging may not be as heavy in the summer. We'll see because the market is really going through a change in my opinion, the last few years. So we'll see. But watching these levels 2247 to the downside, 2234, 2211, 2199 to the upside. If we hold this little line here, 2266.50, then we're watching the 2290.60, 2301, 2313s. We'll see how this plays out. Remember, the Rust is a lot of small cap and also banks, right? And if you look at banks are really shaking and baking right now. I think definitely more volatile than usual as far as their movement in the range. So this range and buy back up on the RTY, people are definitely looking at small caps. And whenever the market is I'll say very choppy or um is sort of not trending in a specific direction, you see people go into small caps. So if you look at small caps, they've been exploding, and I definitely didn't dig into small caps to do for this video, but there are definitely a few small cap stocks out there that are getting some love. And whenever you see a little bit of turbulence in the market, definitely look at small caps because people tend to go and play there a little bit more, and they become a little bit more volatile the shakier the blue chips are. So that's just my opinion. No, not saying it's a fact. That's just my opinion. Okay, let's head over to Amazon. Okay. So Amazon, I believe they're purchasing Metro Goldwyn. There's just a lot going on with Amazon at the moment. Is that good for Amazon long term? Yes. Purchasing content for a company that has massive distribution leverage is always a plus, right? That is always a plus. You can't lose by purchasing more content. Like content is king. No matter what anyone tells you about, this company and if you buy good content, especially, um, I almost think this is I'm trying to think of the word right now. This is not sentimental, but I can't think of the word right now. I'm drawing a blank. But people like to watch things that reminds them of prior times, like when they were, whatever you felt when you watched James Bond, right? Whatever you felt when you watched just some of the great movies that they have, the great franchises that they have, right? It's a great purchase by Amazon, I think, right? I think it's going to play out really well for them long term. But right now it's a battle of a lot of platforms, and I understand why they made that purchase. Just I think it's a very smart purchase. So the levels on Amazon, and I could be wrong because I'm not usually, I'm not saying I'm not usually a fundamental trader, but I will dig into the fundamentals after earnings to help to give context to my technical levels. But yeah, let's keep going. So we're right on those 3220s. And what did we say? 3220s is the zone. That's the area to watch for when we go into it. Watch to see if we can stay above 3190s. And what we've seen is we had a dip down to the 3140s. Look at this dip. Boom. Buyer stepped in, buyer stepped in, buyer stepped in, pushed us back up through the 3220s. We managed to pop above the 3268 area, but we didn't quite reach 3340s. Pull back down. Buyers stepped in 3190s. Buyers held us above 3190s, pushed us back up 3260s, pulled back 3220s, pushed back up 3260s above that, made a higher high here. Then we curved and came right back down through it. And so now we're hovering right above the 3220s. So what I watch for is to see if we can hold above the 3220s or hold above the 3190s if the buyers step back in. If they don't, then that opens the 3142 area. Below that, the 3085, which is the bottom of this zone. If we get below the bottom of the zone, it could get wild. So we got the 3068s, 3020s, then 2950s. Um, Me personally, I know this market's been volatile. I just think that a lot of the heavier money is sort of repositioning for a run, right? And so you if you're waiting for things to come back to your level, um, there's no rush. I think they'd rather things to be lower so they could get in. And if it dips a little bit lower than that, they know it's not much further before the market rebounds and begins to go in the other direction, right? So I know quite a few people are predicting that this market is going to make another high, all-time high this year, and they're just waiting sort of for the shakeout to get great entries to ride it back up. My recommendation is if you aren't a hedge fund and you're not great at scalping, and also you're not selling premium, what you may want to do is wait for the market to be trending in one direction or the other. Don't try to get the best price, just try to get the right direction. And if you can get the right direction, even if you don't get the best price, at least you know you're with the trend. So watch these levels that I mentioned. If we head back up, I'd watch if we get over 3268s, watch to see what we do with the 3340s, right? And if we're bullish above that and we're going, then you may have something. You could also watch for a break of these previous swing highs, that 3311-ish area. And then this area right here is the 3290s. So those are the areas to watch on Amazon. Netflix. So Netflix being Netflix, we had this little zone here. Let me extend that out a little bit, just a little bit. Um, well, maybe more than a little bit, just to make sure we have these bad boys ready for us when we're looking at this, so that we are clear on those levels. So we bounced around inside this zone, dip below, pull back in, dip below again. We what we've mentioned just historically, right, with Netflix, and I know the chart looks a little bit scrunched up here, but I just want to show you the longer view of what we've seen, let me scrunch this up a little bit more. You don't have to worry about the specific numbers, but you do have to watch the levels. I think it's really important. Above the 550s historically, right? Not historically like forever, but um, back to July of 2020, right? What we saw was when we pushed above the 550s that the air got thin for Netflix and we sort of went back down. Here, here again, how many days are we up above those 550s, right? We had earnings. And, if you remember that time, what I mentioned was we got to break 600 and we've got to go. And if we pull back into the 550 area, what would have been ideal would have been the buyers to step in right around this 550 to 540 ish, maybe even 535 ish area, and took us back and made a higher high, right? That was what was necessary. And you see this trend from here that we're waiting for that to come back in and test and hold and go back up. That did not happen, right? Instead, we pulled back up here into the 560s, and it appears as if we were building. And when we didn't make the higher high here, instead we went back through the trend, back tested the trend, and went down. It sort of broke that momentum, that sort of the expectation of the springboard um, action. So now we're kind of meandering, and so each time that we've dipped below the 475s, that's sort of been a buy, right? Like a multi-week buy. And we kind of tested that here, but we didn't dip below it. But we're roughly in that area where right in the 470s to 460s is has been a multi-week buy. But the market is kind of funky right now. Got to be really careful because we don't really have a direction. And also tech has been weak, so you got to really be careful. So if I'm looking at Netflix here, let's broaden this back out. What we want to see is for it to not go below 475. But if it does, you got to be careful because that has been a demand area. Below those four in the 470s and lower has been a demand area going back to last year. So let's see what we do around this area right here, which is 502 50s, and this area up here, which is 515 11s, right? If we break above this and we're bullish, then I would watch for 529, then 535, 542, then 550. If we go below this and we're bearish, keep your eye open for 493. I know that's right there. It's really tight. 490 40s, 485s, then 475s. As far as Netflix, they just have to continue to do specials. If you see what they're doing right now, they're doing quite a few specials. I think they had Chris Rock just got one, and there are a few other comedians that are getting specials. Um, I I think that the problem that they've had is that if the pandemic, right, was the greatest number of eyeballs at home, and you really did capture that, you did a great job of capturing that, and of a lot of people signing up with Netflix. What is your next big thing to garner more eyeballs and more interest? Like, I think Netflix has some great shows, but they don't need to. I'm not the person they're trying to get. They're trying to get other people that may not have stuck or remain with Netflix. They're trying to find growth in other areas. So they've already got me in probably most of the US. Where else can they go, or how can they alter their model to be able to provide more growth potential, whether it's eyeballs that you're measuring that by, or greater profits, or acquiring other property? What can they do to um, create greater growth interest from investors? And so I think that's the conundrum they're in right now, figuring out what to do so that investors feel that there's more value up here than they think that, hey, there's so much competition, there's so much saturation as far as you know different platforms that are offering similar things to Netflix, what it's almost like the industry is cannibalizing itself, right? So you have to see, and Amazon purchasing Metro Goldwyn, right? That's a shot, right? So it's like, what differentiates Netflix? Yeah, Disney Plus. Like, what differentiates Netflix, and how long can they keep that edge? Is probably what investors are considering as they're looking at the competition to see if um, they can get the price point up here around 600. And Disney, interestingly enough, as things begin to open back up, just the stock, it's they have a lot, right? Cruise ships, um, Disneyland, Disney World, then Disney Plus, the Marvel. They have so many properties. Um, so it's just interesting to see, because that's also considered the competition. And the question is, would people have Netflix and also have Disney, right? Are the adults getting Netflix for them and then getting Disney Plus for the children? So it's all interesting, all interesting. That you need to find someone who's more fundamental, that sort of into the fundamentals and does all the fundamental research. That's the person that will be able to flesh that out for you. So this bounce right out of this area here, way down here, 547s by this 536 area. Awesome buyback up, almost like a double bottom. Um, why is NVIDIA going? Well, if you remember a few weeks ago, we mentioned that there was a shortage on chips and that we should keep our eyes on chip companies because there's a lot of energy around that, because the US Congress was discussing funding options to be able to send money and provide some liquidity for the chip industry to push them to get these chips produced. And you remember I discussed that used car prices were through the roof, and some newer models were not making it to the lot because they just didn't have the microchips, right? Which is, these days cars are just mini computers. You need those. So where are we now? Well, we're at the 650 level, and what we want to see is, will there be continuation? That is the name of the game. Will there be continuation? So if there is, I will definitely be using pivots, because being that I'm a retracement trader, the lines that I have: 648.75, 637, 627, 613, 589, 555, even down to 547 and 536, they're gone. I mean, they're down here. So unless we're going to retrace back in here, I've got buckets. So now I have to switch my strategy over to Elise's power of pivots to be able to see those upper levels, right? And see where we're going, be able to sort of project where we're going. But the thing to remember when you're seeing something go BANANAS, Gwen Stefani shout out there, um, is that stronger stocks tend to get stronger and weaker stocks tend to get weaker. So if Nvidia continues to make this push, and I believe they said a ship containing auto parts just sank off the coast of Japan. I could be wrong. I believe that, I don't know where that popped into my mind from, but I think that happened this weekend. So the demand for chips is skyrocketing, right? So chip companies should be getting a lot of attention and heat right now. So we'll see if this continues, but on this push, wait for a pullback. Don't chase. Waiting for a pullback is usually the best way to play something. If you're a breakout trader, then you probably have a strategy for that. But if you're a regular trader that's looking for great entries, trying to get buy low and sell high, usually waiting for the push and the pull, and on that pull is where you enter, is usually the best strategy. Pull back in the structure or previous breakout area, and if you want to have your stop below the swing low of that area, um, That's a strategy that you can employ, or if you have a trend and it's going, or if you have pivots. So just a lot of different ways to trade, but this thing is definitely strong. We'll see if this continues. Okay. So looking at Microsoft, and to be to be clear, Microsoft and Apple and Tesla drove me crazy last week. But let's get into it. Um, so we're above the 249.46. We have to see if that area holds and if we sort of buy back up. If we dip below, we do want to keep an eye on this hitch here, right around 247s ish, like 247.23, but the 247 area. And then if we go below that, watch out for the 244.70s, then 242.60s, 240.82, 250, the 251.90s to the upside, and 254.92, then 257.32. So what's all that blah 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 mean? Okay. So if we're looking at candle structure, right, we see the extension from here. We saw the pullback here. Buyers stepping in, gave us a push up here to the 253. We sort of came back down, dipped below, touched this level, this 244.70 area. And we sort of legged up here. And we tried to make a higher high, but that didn't catch, right? Because we need to sort of get above this area. See this little bit of candle wicks here, and get a squeeze through the top. That has not happened yet. But the thing to watch with Microsoft is watch sweeps. So head on over to BlackBox, watch out for sweeps, and watch out for the trend and the direction, right? Right now, it appears to be slightly uptrending, but the market is so choppy and tech is so finicky right now. You got to be careful. But what you want to remember is that the earnings for Microsoft was actually pretty good, if I remember correctly, right? They had multiple departments or sectors that did really well. So what I would be expecting, because I do believe their guidance was good, is that they would, this choppiness is not going to continue. And at some point, people will be looking for value and they'd be stepping in, expecting more movement to the upside. Where that level is, we don't know. But the, the tech won't be weak forever. Like tech won't be shaky forever. There a bid will come under tech because tech is growth and people love growth. Um, but watch these levels I just mentioned. Keep those on your radar and look for reversals. Whether you're using EMAs as a strategy, you're using a VWAP as a strategy. If you're using standard deviation as a strategy, wolf wave as a strategy, whatever your pivots as a strategy, um, GAN line, whatever you're using, um, just watch your levels and watch for reversal candles and the increase in volume, and that's your trigger that that things may be going in another direction, and that could also be your trigger if volume increases and we're selling. mm, that could be your trigger for that could be a trigger for more downside, right? Volume and price is very important, and those are really the things you want to keep an eye on once things get to your zones or the areas of contention. Keep your eye on volume and price. Apple, and Apple is back below the 127.40s, which is an area I think it needs to be above um, to really jam, right? That's the area that once we're above the 127.40s and we're bullish, keep your eye on the 131.70s and 134s, because we at that point we really usually jam. Or I just think there's a lot of interest around that area. Why? Let's go back here. We pull back into those 127s. Look at that push. Look at that push, right? Came back to it. Look at that. And then it was sort of like a reluctant break. Then we went right back to it as a back test. Then look at that. Dip down, then right back through it. We're going to go back down and sort of almost got there then got above here. Look at the legs. Then we came right back to it. And here I should say right back to it. Tried to bounce. Just couldn't do it. Dipped, went right back to it. Below, back to it, back to it, below. So 127.45 area is a strong area. I know I have the swing door down here. And honestly, maybe I want to also add this area as a swing door area where above more bullish, below more bearish. So interesting. So we're at the 124.70s. We'll see if we hold in that area or if we dip to the 121.90s. The last swing low is right here, 121.93-ish, 121.90s. Let's see if we hold that. If we go below that, that opens up the 119s and the 116s potentially. And we definitely don't want to be down there because, yeah, that's not where we want to be. But we'll see how this shakes out. I will keep an eye on this because at least it does like Apple. Doesn't like how it moves, but definitely likes the technical reaction that levels for her pivots. But this is it has a slight uptrend, but it's not holding the way you'd want it to. So we'll see what this upcoming week has in store for us. The what's funny? And it's gonna be super quick. I would think that Apple would be doing well because things are opening back up and people are back in the Apple stores. So I would think that if we're projecting right what their next earnings season would look like, I would think the numbers would be better than expected, and that if there wasn't a flare up as far as COVID, that their guidance would also be good. But we'll see. I'm just thinking the Genius Bar is open. People should be flocking to that, and that's you'd be able to sort of get off, sell a lot of accessories, which is secondary business for them. That should really be jumping. In fact, hold on, I need to call Verizon, but that's a whole other story. Let's keep it moving. Things. Where are we now? Facebook. So if we're watching Facebook, look at this movement on Facebook. It's nuts. So we wanted to get back above the 330.80s and we want bullish continuation, right? So you can watch to see what happens with the 321.70s if we pull back to there, 313.80s, then the 307.90s, 303.96s, but just the 303s, right? And the 297s. We've held above the 297s, and you just see the buyers continue to step in on these pullbacks. We had to see if we make new highs here and squeeze above the 330s or 333s, I'll say. See if we get up above that area. So we'll see if the buyers step back in and push this back up. Um, Facebook has been pretty strong compared to a lot of other tickers. But if we remember, I believe their ad revenue was pretty good. So one of the things that were a plus, I believe, for Facebook um, was that a lot of companies had to get online and begin marketing online because they weren't getting customers through the front doors, right? So Facebook really did a good job of executing and copying just a few other platforms and some of the things that they were doing really well and incorporating that into Facebook. So we'll see. But this looks pretty good. We'll see if this continues or if we see sort of a liquidation break here and get a pullback, because from earnings, even though we saw this slight pullback, I have to check the volume to see how many people were actually in. I have to check from back here from this run. But has there been, this is a question to ask, right? And this is what I would be thinking about looking at Facebook. Has there been a significant enough liquidation break for people to take profits that are on this movement? So you had to check the volume. Has there been a significant enough liquidation break for the old buyers to have cashed out and for the new buyers that are going to take it the next leg to step in and push? So that's the question, right? Because when something is on a run, what you wait for is that liquidation break for the initial investors to take profits. And this is just opinion. And for the latecomers to jump on it and take it for the next leg, and seeing if they see more value to the upside on Facebook. Intel, and just grinding, right? So the pullback here, we're still grinding up. So we're in this zone, and want to see if we can get near to the top of the zone, right? So if you watch each level, we want to see if the 5690s hold. And if it does, keep your eye on the 5880s, 1694, then 6206, and 6377. If this area doesn't hold, then that opens up the 5570s, then potentially the 5350s again. One of the things to remember about Intel, they are a chip company, but I'm not sure if the kinds of chips that there is a shortage on, which are chips for, I'll say specifically for cars, because that's an industry I know for a fact needs those chips. I'm not sure if they make those. So not sure how this will affect Intel, um, as far as how NVIDIA is moving. And I have to check AMD's charts to see where AMD is. But no, definitely keep an eye on Intel to see if they garner some interest based on that. And Intel is just a good company, right? So if Intel drops, a lot of times it's going to go back up. Like it's just Intel is a good company. I would I would recommend checking their earnings from April. Check those earnings and see what that guidance looks like, and let that help to inform your decision. Like check their guidance and check those earnings and see sort of what they projected for the that quarter, and what were the results, and what was sort of the reason for this sell. And then once you read the guidance, take a peek at their competitors and see if there are other people out there that are sort of encroaching upon their uh their territory. That's what I would look for on Intel if you're planning to invest, jump in, and take it for a move. But that's just my opinion. Um, I think Intel is a pretty good company. I think it's a great company actually, but you have to decide for yourself. CMG, we did think that this would sell. Um, Buyers stepping in around 1296. That is what they should do, right? Especially above this area, 1311 by 1296. Look for more upside here. If we hold above here, we're going back up. But watch all these areas of contention. Remember, what's the reason for CMG being down? I don't think their sales are down. I don't think there are less people going to the restaurants, because I went there the other day. That line was long. Um, but one of the things that we mentioned was that we thought that they would struggle with universities being closed down. Um, if students are back on campus, their numbers should rocket back up. And I have to, and this is just me, because every time I've driven past the university where there's a Chipotle at lunchtime, the line is down the street, past the bank, down past the post office, past that. It's an insane line. I have no idea why people are, well, burritos are good. But we'll see. So watch 1348 to the downside, to the upside. Watch 1394, then 1421, then 1468, which we'd have to regain to get this drive up. Looking at if we pull back to 1348 and we don't see buyers, then I'd watch this swing low around 1396 by 1311. And if we get below that, then we could really get filthy McNasty. We have to see how this goes, right? The last swing low was down here around 1255, it looks like. 1250s went that low, but then they bought it back up quickly, and we went to the 1510s. Remember that CMG is very rangy. So what you want to do is make sure that you have the trend. If you have the trend of the direction that it's going, um, just jump in and hold on. And you may see a drawdown first, but usually it follows the trend that it's on. And right now, I don't really see a trend. Maybe it's building to go. It looks like there's a slight uptrend here, slight, but no telling if we're going to see a little bit more downside here before we move up. But definitely a great company, in my opinion. McDonald's, what we mentioned with McDonald's is that McDonald's is definitely known to find a range and then bounce back and forth within that range. So it did that here and it's done it before. Finds a range and it just bounces back and forth for look, earnings to earn, like just insane. So the thing on McDonald's is if you feel that this is the range, right? Let me draw this in. And this is going to look a little janky, a little bit janky, but I'm going to do it anyway. And then use this, and I'll adjust this and use this upper portion here around 234 to 235 as the upper portion of the range. And we think we're going to bounce around between here. Then you can just grab something for 2 weeks out and see if you get the alternate direction. Just have a stop in if it pops and makes higher highs, right? So I'll be watching this. This is not trading advice at all. This is for educational purposes only. I would keep an eye on this to see if we get above 35.20s, you want to break in a higher high. But what is probably more likely to happen is that it does this. And we'll see. Right, things are opening back up, and a lot of places are probably going to see more customers. McDonald's had a ton of customers during the pandemic. I mean, I'll trust me, I was one of them. But we'll see how if this continues. It's 235.20s. The upper portion here is 238. Pull back here is 231. This area here is 229s, 229.29. Then we have 226.75. We'll see how this plays out at McDonald's. Head on over to Tesla. 616 is the area for us on Tesla. We did dip to the SOFI levels and see the reversal here. What we want to see is hold above 616s and an extension back to the 650s. We'll see how that works out on Tesla. But Tesla dropped to a level. These purple lines is usually where the buyers begin to step in ever since we've made this big break. So we'll see if we continue to the upside. But keep an eye on contracts. Check out BlackBox and see what those sweeps are looking like over the last 10 days or so. And keep an eye out for sweeps and keep an eye on Tesla to see if the volume increases and the price continues to go up. I'll just keep an eye on it to see if we've got that right. If the buyers are in, then we're gonna go for a nice little run. If the buyers are not in, then we are going to be going back down here. But what I do like is that we did have a reaction in the 500s. Let's see if that reaction that has catapulted us up to the 600s, if that continues. Right now we're at the 16s or 616s, and we want to see an extension up here into the 650s. But this does look good on Tesla. And was there? Let's head on over to Goldman Sachs. Actually, JPM first, because so looking at JPM, we are getting legs above the 160, 160s. So what you want to see is a break of these upper wicks here and continuation above the 165s. We'll see if that happens. For me, I've got nothing here. I need some pullbacks. And so for me, what I'm waiting for is a pullback below the 161 60s and failure and movement down here to the 156 70s. So we'll see. I think banks are overheated. I don't think that investors longer term will feel that this is just a little trend area. I just need to, okay, I'll do that later. Because I have to look at the lower time frames and the higher time frames too. I have to get both of those, and I have to look at the volume. and check the time at price. I'll do that later. But seeing these upper wicks here, we'll see. But that I just think banks, but it doesn't matter. Like the market tells you what something is worth, and you just have to be right within your time frame and your time horizon, and that's all that matters. Doesn't all Everything else is just noise. So watching JPM, it's just been getting stronger and stronger from these lower levels here, the 140s. Just every time you see it, it's getting stronger and stronger. Even this strong pullback, they bought it right back up. So that has also been the story. And I know I mentioned this on the last video. People are used to tech driving the market, but the real driver has really been the Fed and has really been banks, right? Financials are what took the market to higher highs and has continued to sustain the market. If the financials hold on, the market's going to buy back up. It's a matter of time, right? That's all it really is. And I know that there's a squeeze going on in the housing market right now, where there is a greater demand than there is supply. And I know that the type of house, right? If you're talking about houses that are over 500,000 or 600,000, that market is very different from the houses that are around 250 or 300 and lower. So you sort of got to get into the minutia there. But the housing market is really insane right now. And even though home sales aren't exploding, home sales aren't exploding because the market right now is being heavily manipulated with the forbearance legislation that's out there, and with the pandemic. There's just a lot of there will be no telling until the whenever the expiration date on the forbearance legislation is, meaning people don't have to pay their mortgage. Whenever the expiration date on that is, and also when there's a clearer picture on the pandemic and the ability for landlords to be able to evict renters, when all these things sort of come to a head and change, we'll start to get a true view of the housing market. Until then, the numbers just feel a little bit cooked and a little bit manipulated. It's hard to figure out the details because the market is not operating as it normally does. Just my opinion. Goldman Sachs, same thing. Look at this, hovering at highs. Strong stocks get stronger. I'm going to be watching Goldman Sachs this week because I think we may get a little bit of thunder and a little bit of lightning. Either way, because I am here for the chaos in the market. I am here for the insane drops and insane runs. Do I prefer trend trading? Yes, but I'm here for all of this because there are tools and strategies to use no matter what the market does. That's the beauty of trading. But Goldman Sachs is above that 367 area. If we up here, I'll have to draw some more zones, but I'm probably going to be using pivot strategy here. If we retrace your 367s, you want to see the buyer step in if you're bullish. If you're bearish, you want to see the buyers step out of the way and the sellers get us below here, and we get a retrace in the 362s, then the 356.40s, then the 347.90s, and 344s. That's what you want to see. If you were watching the trend on this, right? If you're like, hey, what's the trend here? I just draw a quick trend line. And that is roughly what I'll be watching, something like that, right? And maybe a little bit off, but I'll be watching that trend line and seeing if we can pull back into the 356s or the 362s and see if the buyers step in to give us a little bit of um, sort of springboard action here. We'll see what happens. We'll see. But this is almost like it's just bubbling up a little bit. We'll see if that continues up. But as I mentioned before, I do think that these banks, as far as the market price, are up there, and just be careful. Just be careful. So the SPY, nice little push here. We're above the 420s. We'll see if we see continuation up through the 423 area. If not, if we go below 420.33, then we watch for 418.22, 417.27, 416, 17, then 413, 40s, then 412 teens, then 409s, then 407s. What am I expecting? To be honest, I'm just watching right now. As far as at this moment, I just wait for a setup and triggers on my intraday, and I take trades. I don't have any, you know, far out projections on where the market is going, or something like, oh, the market is going to the SPY is going to 500. It will eventually, but what's your time horizon? And so, whatever people are saying, just watch the time horizons and look for plays, look for where the buyers are, where's the demand, where's the supply, and make sure you get in between that, and make sure you have your directions down, and take profits and trail, and you're good to go. Um, did I forget? I may have forgotten something, but oh, we are over 500 subscribers, which is awesome. We're not not really pushing anything, but we thank you guys for your support and the messages, and we'll just look forward to trying to be continually helpful. If you have any requests of tickers you'd like us to check out, please just DM us or email us, and we'll take a peek at those. I have to see what we can do just in celebration of being over 500. Yeah. But if you liked this video, please don't hesitate to tap that like button. And if you'd like to receive more videos like this, please subscribe to our YouTube channel, Power of Pivots, where you can look forward to receiving not just content from me, but amazing content from Elisa as she gets into how she utilizes her power of pivot strategy to find great pre-market, intraday, and post-market entries, including swing plays. I am going to try to get her to hop over on this side and give us a video. We'll see if we can get that to happen. But thank you so much for your time. Happy Memorial Day to our veterans. Thank you so much for your service. We really appreciate you. And as a country, we could never do enough to thank you for what you've done. And as a veteran, I would like to, thank my fellow brothers and sisters for your sacrifice, what you do every day to just sort of keep this country, um, the home of the free land of the brave. Thank you so much for your sacrifice. Have a wonderful Memorial Day, and stay safe and have a wonderful week of trading. Thank you so much for your time.